Hello, you're watching World Talks on TVP World. My name is Sasha Farbach. OPEC Plus has agreed to a small increase in oil production for December, around 137,000 barrels per day, before hitting pause on output hikes for the first quarter of 2026. Now, the decision comes as oil prices slide, demand weakens, and sanctions on Russia reshape global energy trade, from Middle Eastern producers to refineries in Europe facing shutdown risks. At the same time, countries like Bulgaria and Turkey are scrambling to secure fuel supplies and avoid political fallout. We now speak with Wojciech Jakóbik, energy sector analyst, to give us his insights. Good morning. Thanks to joining us here on TVP World.
Good morning. My pleasure.
Let's begin with the first reaction here. I mean, did this move by OPEC surprise? Is this something that was coming? How do you think the immediate reactions of all this morning? We're already seeing that oil prices, if we're looking at Brent, it's already up to $65 and WTI about $61.
So it is partially a surprise because we've been expecting this increase in oil production for 137,000 of barrels per day, but the market was not expecting this pause in oil production release in the first quarter of 2026. So this signal is mixed. On one hand, we have a signal of greater supply of oil this year, but next year we could see a pause in the production increase. So it is the situation in which the signal is mixed. So the market is looking forward for what is happening.
Mm-hmm. You're saying mixed signals as well. I'm curious also what the market and what OPEC Plus now is doing, because we have those new sanctions coming from the United States recently on Russia in terms of oil. How does this impact all this? How is this connected?
So from the perspective of OPEC Plus, they are expecting an oversupply on the market. So it is a signal that the sanctions against Russia are not creating any danger when it comes to security of supply on the market. We have a downturn in Chinese economy. We don't have good results from Europe, especially Germany, and Americans are not providing data that are showing some economic rebound. So in general, there should be a limited increase in demand for oil. And according to International Energy Agency, we'll see a rising oversupply on the market. And that is why OPEC Plus might pause its production increase, but we'll see about that. The next summit is planned for 30th of November, and we'll see what the oil powers will do, because they reserve the right to change their behavior. So it is also possible that they will provide some further increases in production, for example, in case of some limits in oil supplies connected to sanctions against Russia.
Mm-hmm. Now, also on the Russian question here, I mean, it's going to be difficult now for Russia to push out any kind of output with all this, with the sanctions. How significant is that going to be also impacting their revenue? I mean, they're going to be harder to sell this out, more pressure there. So how is it going to work out in terms of pricing, and specifically in Russia?
Mm-hmm. So the Russian crude needs to be even cheaper to get to the market, because it is not said that the oil trade with Russia is impossible. It is possible, but on specific circumstances. Russia needs to decrease the price to make its oil trade more competitive in spite of the risk connected to sanctions. And Russia needs to pay several intermediates on the way that are needed to make this oil go to the market effectively. So the result is that the oil supply from Russia is somehow limited, but Russians can adapt. But in the end, the crude price from Russia, Urals oil grade, would decrease further on. And the difference between Brent that you've mentioned and the Urals grade could go over $10 USD per barrel. So Russia is earning less and less for its oil trade, even if it is able to somehow omit the existing sanctions. So the next step from the Western Hemisphere would be to look over the sanctions, to update sanction regime, to introduce secondary measures against those who help Russia to export Russia in spite of the existing measures. So that is how it goes, and that is the logic of sanction regime.
Okay, so you're saying Russia already making less and less for that barrel pricing, but another flip side here is the United States pushing more and more, especially shale production, right? So how does this square? Because we're looking at also price setting. Has OPEC Plus lost a little bit of their, let's say, ability to set this with the U.S. pumping out more shale? Is that any kind of impact here significant enough?
So the oil cartel, OPEC, which is consisting mainly the Middle Eastern countries, is having less and less impact on the market because the great production is coming from shale producers like US, like Canada, and they are more important in this matter. Over half of oil trade is coming from the supply from the non-OPEC producers. You have Kazakhstan, you have different other producers that are aiming at increasing production in spite of the OPEC Plus deal, including Russia. So that is why the market is expecting further oversupply and decrease in prices. And paradoxically, this move from OPEC Plus to pause the oil increase could increase the competitiveness of American crude, could increase the competitiveness of oil production in US and promote further increase in production. So this stick has two sides, two ends, and it is also helping Americans to gain the market share.
I also want to jump over to a little bit our region here, or the wider region. If we're looking at Turkey as well, looking as they've kind of tried to diversify. They've been traditionally a big buyer of Russian oil as well. How does this fit in? Are they going to get other supplies? How is that going to affect the markets? And also, we're looking also at I believe, on the Bulgarian front, that they're trying to, as well, trying to push a ban on diesel and jet fuel exports. So tell us about those two issues.
So we have several factors in play. In general, the refineries that you have mentioned were importing Russian oil and exporting fuel produced with this oil to the European market and also different Western markets. So it was a way to still sustain some fuel flow from Russia to the Western world in spite of the sanctions, to make Russia earn some money in spite of what is happening in Ukraine. And there are several factors like the new US sanctions against Rosneft and Lukoil, which are limiting transactions connected to oil and fuels and is impacting Burgas refinery in Bulgaria, which needs to stop its exports of fuels which were produced with Russian oil and in the past was exported to European market. And the second part is about Turkey and the other factor, which is American pressure to diversify away from Russian supplies. So Donald Trump asked countries like Bulgaria, like Slovakia, Hungary and Turkey to end reliance on Russian supply. It will take time, but we see the diversification has started. Turkish refinery that you have mentioned started to import oil outside of Russia, and it is a changing behavior. And to make it a long-term commitment, we would need to see a full enforcement of US sanctions. We'll see how Americans behave if someone is breaking those sanctions regime, if they are imposing secondary sanctions. If they do so, this trend would be sustained. If not, the customers could go back to Russian supplies.
Speaking of also American reaction and involvement, we've had Donald Trump really make some quite direct threats to Nigeria in the last sort of couple of days. Nigeria is an OPEC Plus member. Is there a coincidence here? What do you make of that?
Well, America is having an active policy that is not coordinated with anyone when it comes to threats to the trade wars, to the sanctions regime. And Nigeria is another country which is having an ample oil supply, like Venezuela, which is on a crosshair of US. We'll see how it turns out. For now, we have just one signal and one threat from American president, and it might be related to Christian minority in this country, not immediately to oil supplies from this oil producer. We don't have enough information to measure it carefully, so we'll see how it turns out in future.
All right. And also, I think the big question here, as European consumers are trying to digest this news, it all sounds like oversupply is coming for these next few months. Does that mean now, as European consumers, they can expect lower prices at the pump? Or because of the supply disruption, because of the sanctions, is this going to be shortages? Which way we're going to go in the winter or the next few months?
Yeah. So this autumn, the market was predicting an oil oversupply, and we can already see an economic impact. For example, in Poland, in my country, we have a preliminary assessment of our inflation rate in October, and it was slowing down to less than 3% of prices increase in October, mainly because of decrease of prices of fuel in at our gas stations. So we already see an effect this autumn. We'll see how it turns out, if the oversupply is sustained or it is not, depending also on the production policy from OPEC countries. But if this trend is continued, we'll have decreased oil prices at the pump, and we'll have a positive impact on economies that are dependent on oil and fuel supply from abroad.
All right. Now, as we said earlier, already Brent crude and the WTI already up on Monday. Let's see how it continues as this oversupply continues. Look, we'll close with that. Really interesting stuff. Thank you so much, Wojciech Jakóbik. Really appreciate the insights this morning.
Anytime. Have a good day.
And thank you for watching. That concludes World Talks. But as ever, stay tuned right here on TVP World for more. Goodbye.